There were 1.7 million electric vehicles that were sold in the year 2020, and by 2025 that number would surprisingly reach 8.5 million. What if I told you that NIO, often known as Tesla of China, sold 50,000 cars in 2020 and that it would sell 600,000 cars in 2025? Isn't it crazy? NIO is one of the most promising participants in the EV industry, with a strong chance of becoming a global leader. Stay tuned as we have a few mind-blowing facts about NIO throughout the video. Welcome back to our channel. Make sure to hit the like button and subscribe for us to provide you with more valuable content. In today's video, we're going to look into how to trade NIO stock before earnings and get rich. Please note that nothing in this video should be seen as financial advice. We're bullish on NIO as of right now, but a lot of things can change over the coming years and could bring a lot of variations. So don't just rush into our recommendations. There's always the risk of losing money by investing in the stock market. With that being said, let's get back. Electric vehicles will become the mode of transportation in the future. Many automakers have begun to accelerate the development of their own electric vehicle lineups. Tesla has an advantage in the electric vehicle industry since it was the first firm to make a move. Companies are still battling for market supremacy when a product category is in the early stages of adoption. NIO is one of those companies that has chosen a path. NIO is only 6 years old and is still in its early stages. Their quick execution and unique capabilities have allowed them to carve out their own niche in the electric vehicle market. Before we look at the aspects that influence the NIO's success, let's see if the stock has a bullish or bearish future. NIO's native country of China will be one of the first to fully embrace self-driving technology and make it legal. With technologies like lane keeping assist, automatic parking assist, and adaptive cruise control, as well as a cross-traffic alert brake, the artificial intelligence NIO Pilot has been taking steps towards self-driving. One of the main reasons NIO has to expand worldwide is to develop the NIO Pilot. According to FactSet analysis, NIO is predicted to lower its losses to 55 cents per share for the entire year of 2021, down from 73 cents in 2020. This year's sales prediction is a 124% growth. NIO outsold Li Auto and XPeng in September, but the competitors outsold NIO for the entire third quarter. In the third quarter, NIO's EV sales more than doubled, while the competitors' sales nearly tripled. NIO will accelerate the introduction of new electric vehicles in the face of strong competition. In 2022, it plans to release 3 new products. The ET7, NIO's most technologically advanced vehicle to date, is one of them. Goldman Sachs analyst Fei Feng recently upgraded NIO shares from hold to buy. The analysis increased sales predictions to account for the ET7, which is anticipated to be the company's flagship new electric car with a battery range of more than 600 miles and advanced autonomous driving capabilities. In the first quarter of 2022, it will be available in China, and by the end of 2022, it'll be available in Europe. According to FactSet, NIO stock has 18 positive analysts, 1 neutral analyst, and 1 bearish analyst. According to MarketSmith chart analysis, NIO stock is attempting to reclaim the 10-week moving average but remains below the 40-week line for the time being with no buy point. If the EV stock moves above the 10-week moving average, it may have reached the bottom. The Chinese government's data collection crackdown weighed on Chinese stocks, particularly NIO. Electric vehicles will generate a tremendous amount of data as they become more smart. In the automotive industry, new data management and security requirements mandate in-vehicle processing and no information gathering by default. NIO's accumulation distribution rating of C- over the last 18 weeks indicates roughly equal buying and selling of shares by significant investors. NIO stock has 8 quarters of increased fund ownership. According to the IBD stock checkup tool, NIO is aiming for the premium car market in China. 2 of their competitors are Li Auto and XPeng. Furthermore, Geely and Chinese internet giant Baidu intend to collaborate on the development of electric vehicles. Apple supplier Foxconn is also interested in the electric vehicle market. A strategy that one can use is the concept of leap call. If you're ultra bullish about NIO, although NIO has had a few major down days, it's better that you could buy a leap now that could go out to either January 2022 or January 2023, and usually it's a long-term option. You generally want to take a call that will help you take advantage of the stock move. Fundamentally, NIO's financial situation is improving after the stock was crushed by debt and liquidity worries. It has significantly reduced losses while achieving significant top-line growth. A larger car variety, foray into Europe, and battery advancements all create further possibilities for growth. On the other side, the EV wars are heating up. In the medium term, the chip supply shortage is pressure for NIO. In the long run, battery shortages may become an even bigger issue for EV stocks. NIO claimed that it had doubled the number of battery swap stations and executed 2.9 million swaps, up from 1 million in October. It has introduced battery swaps to Norway, presenting a new challenge for Tesla. NIO's long-term success will be defined by the ability to capture a major share of EV market by increasing profits and expanding beyond China. NIO now outsources vehicle production, which is beneficial in the short term but not in the long run. They were able to expand so swiftly because they outsourced production in the near run. Electric vehicles and charging stations feed off of each other. The more electric vehicle owners there are, the more charging stations are required. The more charging stations that are constructed, the more individuals are willing to purchase electric vehicles. NIO will have to adjust to its customers' growing power demands. When it comes to electric vehicle power networks, NIO has over 1,000 charging stations in China, but Tesla had to construct much of the charging infrastructure in the United States from scratch. Instead of creating more charging stations, NIO is focusing on partnerships, even partnering with their local competition XPeng. China currently has a huge quantity of charging infrastructure that is growing every year, so instead of building more charging stations, NIO is focusing on partnerships. Vehicle sales and service packages are the two main methods in which NIO makes money. For the time being, car sales have been losing money, but service packages include battery swapping. This is where they truly excel in comparison to the rest of the electric vehicle markets. Their battery subscription service saves them thousands of dollars on the cost of their vehicle. This will encourage more electric vehicle users to contact NIO. This year, Norway became the first country in the world to sell a majority of new electric vehicles. According to NIO CEO William Lee, the Scandinavian country is the forefront of e-mobility and environmental development, which together with its strong sense of community and great purchasing power makes it a perfect match for NIO. With continued success, NIO is going to be one of the most successful companies in the world, and we're absolutely positive that NIO stock has great potential and will hit a greater zenith by 2022. So there you have it, and with that, we've come to the end of our video. We hope you enjoyed watching the video. Thank you for taking the time to watch it. If you found this video inspiring and want to see more, make sure you hit the like button and also subscribe to the channel for more updates. Leave a comment below on what you think about NIO stock. This will help us learn your take on it and improve our understanding. As you know, learning is a mutual process.